Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind those official corporate documents. Today, we're diving into a filing from Katapult Holdings Incorporated, and let's just say it involves a bit of a financial dance around some loan agreements before we jump in. If you love getting clear, no-nonsense breakdowns of these filings, make sure you are subscribed. And if you want to chat with us and other like-minded folks, join our Discord community. The link is right there in the description below. So what we have here is a Form 8K filing from Katapult Holdings Incorporated. Think of an 8K as a company's way of saying something important just happened and you need to know about it right now. It is for those really significant events that a company can't wait to report in their regular quarterly or annual updates. The report itself is dated the 20th of February 2026, and it tells us about an event that happened a little earlier in February on the 13th. This is all about Katapult Holdings Incorporated, a company that we've seen before. They're involved in providing point-of-sale financing solutions, which means they help people pay for things over time when they're buying stuff. They have common stock traded under the ticker KPLT, and also redeemable warrants traded as KPLTLU, both listed on the Nasdaq. The main story here is under item 1.01, which is about entering into a material definitive agreement. Basically, the company had to make a deal to adjust their existing loan agreement. The company entered into something called the 8th limited waiver to their amended and restated loan and security agreement. Now, that sounds like a mouthful, doesn't it? Let's break it down. An amended and restated loan and security agreement is just the fancy name for their main loan contract with lenders. This 8th limited waiver is an amendment to that contract. This loan agreement originally dates back to June 2025, but it has been amended and modified many times since then. This filing lists out quite a few of those previous waivers and amendments, showing that there's been ongoing adjustments to this loan. So, why the new waiver? It's because Katapult Holdings, or more specifically, their subsidiary Katapult SPV-1 LLC and Katapult Group Incorporated, failed to meet a certain requirement in their loan agreement. This requirement was about maintaining a certain level of minimum trailing 3 month net originations as of the end of January 2026. In simpler terms, they did not generate enough new loan business over the past 3 months leading up to the end of January. What this 8th limited waiver does is essentially forgive that specific past failure. It permanently waives what they call the existing default. This is good because it means the lenders are not going to take immediate action against the company for that particular miss. Now, the actual details of this waiver are in Exhibit 10.1, which you can find attached to this filing. This is the part where the lawyers would really dig in. But for us, the key takeaway is that the company had a covenant breach and secured a waiver from its lenders. Then we have the standard section about exhibits, where they list the documents attached to the report. This confirms that the 8th limited waiver itself is Exhibit 10.1. It's dated the 13th of February 2026, and it's an agreement between Katapult SPV-1 LLC, Katapult Group Incorporated, Katapult Holdings Incorporated, and the agent and lenders. Exhibit 104 is the interactive data file, which is standard for making financial reports easier to analyze by computers. Finally, the report is signed by Orlando Zayas, who is the Chief Executive Officer. This makes it official. The signing date is the 20th of February 2026. So what does this all mean for Katapult Holdings on the surface? This filing is about a specific missed financial target and getting a waiver from their lenders. This isn't ideal, as it signals that the company is struggling to meet its ongoing financial obligations. Lenders put these kinds of targets in loan agreements to make sure the borrower is healthy and can repay the loan. When a company misses these targets, it can lead to defaults, potential penalties, or even demands for immediate repayment. Getting a waiver means they've bought themselves some time and avoided an immediate crisis. But it doesn't solve the underlying problem of not generating enough new business. This waiver is a short-term fix to a potential problem. The real question is, why are they struggling to originate enough new loan business? Are market conditions tough? Is their business model not working as well as it used to, or are they facing increased competition? This filing doesn't give us those answers, but it definitely points to some challenges in their core operations. Looking at the broader picture, this kind of waiver can concern investors. It shows that the company is operating under pressure and might be facing liquidity issues or struggling to grow. While they've avoided a default this time, they need to show a clear path to meeting these origination targets consistently to regain lender confidence and ensure their long-term financial stability. If they continue to miss these targets, more serious consequences could follow, potentially impacting their ability to operate. Alright? That is our breakdown of Katapult Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can turn things around? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord in the description to keep the conversation going. Thanks for watching. See you next time.